What is going on, my good old friends of YouTube? Welcome back to yet again another episode of Stocks Talk Stocks. And in this episode, you guessed it, we're going to break down some stocks. We're going to go over some company earnings. We're going to look at some stock charts. So if you all find value, of course, hit that like button. Feel free to subscribe to the best stock market channel on YouTube. And with that being said, let's dive right into it. Let's not waste any time. Starting off with stock number one, which is Costco. And you guys probably know, if you've been watching my channel for quite some time, Costco is a company, it's a stock that I want to own, but I just have not gotten the chance to buy it. Yeah, sure, I could go buy it tomorrow if I wanted to, but you guys got to realize in the stock market, price is what you pay, value is what you get. So right now, in my opinion, Costco is a little bit overvalued, and I've been saying that for quite some time. And obviously, it's not as overvalued as it was when it was at, I think it was at over $600 a share at one point. Was it? Or yeah, it was $612 a share. That was about a year ago. So it is down to what now? $475 after the bell. So it is down a good amount, but I want it to come down even more. I think under $400 a share is a steal on Costco, especially if it gets down to $300, $350. That's where I'm looking to buy. If it ends up getting there, who knows? Last time it tried getting under $400, it ended up running away from us. You guys can see it's done that many times. It hit 440, ran to 560, hit 440, ran up to 530, and it just ran up to 530 again recently. Now we're actually again falling after the bell. So the stock's down about $10 after the bell right now. After they, let's see, what did they do? They ended up reporting, where is it here? $3.30 in EPS, which beat the $3.21 estimate, and they actually missed on sales. So they beat EPS, missed on sales, $54.24 billion versus $55.54 billion estimated. And Q2 2023 membership fees came in at a little bit over $1 billion, guys. And I actually just got my membership myself. I told you all about that a couple days ago or a week ago, whenever that was, that I was looking to get a Costco membership. So I officially did that. So you can thank me. I just gave you guys, all you shareholders out there, $64 in revenue or $63 in revenue, whatever it was, guys, because I just got the gold membership. Yeah, I'm pumped. I'm pumped. I love Costco, guys. I just got this $4 rotisserie chicken, and I know that the strategies that Costco uses, they have a lot of cheap products that bring you in, and then of course they bank on you spending on the more expensive products, which that makes sense, right? The whole psychology behind it is pretty interesting. And you guys know that they put the expensive TVs, the jewelry, the computers in the front of the store. So you see all the expensive items, then you go to the cheaper items and you're like, oh, it's cheap. I'm going to buy more of the cheap stuff, right? It's psychology, which we're not going to get into in this video. But yeah, I don't know why I even mentioned that. But either way, I'm pumped about Costco. I'm pumped about me having the membership and hopefully one day owning the stock. But at this point, not there yet. It's not there yet. Again, I want it personally under $400 a share. So it looks like here they beat forecasts, although I'm not really seeing the forecast. This is going to be one that I'm going to dive deeper into. I'm actually going to look into the the earnings release. Maybe I'll make a video on this tomorrow, more in depth on Costco. But overall, they beat EPS, missed on revenue. It looks like it is down about $10 after the bell, which I'm all about it. I want it to come down more than that, $100. So let's bring it down $150 from here. So, we could end up building up a position. This is one that I'd love to actually add in my Patreon portfolio, which if you guys didn't know, I'm building out a Patreon portfolio from scratch. I started that a couple weeks ago, and all my Patreon members, they get access to that. Full disclosure, they get to see full transparency, rather, what I'm doing in that portfolio. If you're in the Patreon, you also get Discord access. You get my charts throughout the day and exclusive content. A bunch of content is on Patreon, guys. Shameless plug. Check it out. Link down below. This is one that I'd probably buy in there when the time is right. So Costco, down $10. Let's see how that unfolds heading into tomorrow, next week. It's going to be pretty interesting. And C3AI is one worth watching as well. This company reported earnings, ticker symbol AI, and it is up a whopping, oh my God, look at that, $4 after the bell. So this closed at $21.30. Now it's at $25.49. Talk about a move, guys. It's up 20% after the bell. That's pretty monstrous right there. Monstrous move for C3AI. So what did they do? They did adjusted EPS of negative 6 cents, so they lost money, versus the negative 22-cent estimate, so they beat on EPS, and it looks like they beat on revenue, 66.67 million versus 64.25 million estimated. So they beat EPS, beat on revenue, and look at that guidance, guys. Guidance is looking pretty good. They see Q4 revenue of 70 to 72 million versus 69.85 million estimated. Not too bad. And they see full year 23 revenue of 264 to 266 million versus the 261 million estimated. So right off the bat, guys, guidance is pretty strong for C3AI. And you know, companies, especially growth companies, when they post strong guidance, the stock market loves it for the most part, right? And that's why we're seeing a pretty big move right now in this particular stock after the bell. And if we pull up the 4-hour chart, guys, let me show you what's going on here. 4-hour chart shows we are bouncing right off that 180 SMA. We're breaking out of the 50 SMA. And to me, guys, it looks like this trend is continuing, the uptrend that is, and it's, you know, completely breaking out of the wedge that I just drew out. You guys can see we were in a wedge. We were making lower highs, higher lows at the same time. Now we're completely breaking out. It looks like we're actually right at the highs now from the middle of February, being at about 25.75, 26 bucks. That's actually where I'm going to put my alert. If we do break out of that point, there could be even more upside for C3AI, ticker symbol AI. So kudos to you. I think I got a comment that somebody just bought C3AI yesterday, and that's really risky to do. I'm not going to lie. You know, gambling on earnings is a risky game, but kudos to you. You did that. You bought it. You made money. Hopefully you locked in the profits. Maybe not. I'm not telling you what to do. I mean, hold it for all I know. I mean, it could go up even more, but you know, it's up a lot. So if you're up on this, kudos to you. That is awesome. We also had Marvell report. Let's pull that up. MRVL is the ticker. Marvell reported, and it looks like here right off the bat, we have a head and shoulders where the right shoulder right now after the bell is playing out. Look at that. Left shoulder right here. We got the head, got the right shoulder. The right shoulder's playing out right now. The stock's down about $3 after the bell. Let me pull it up and see what they ended up doing. And you guys can see on the intraday, the big dump off here after the bell. So Marvell ended up doing, let's see here. Looks like they reported, where the heck is it, guys? Looks like they did, come on, where is this here? Adjusted EPS of, actually, no, that's guidance. Looks like they lost $15 million on the quarter. That's a negative 2 cent loss of 2 cents EPS. Adjusted basis, they actually made a little profit there, 46 cents. And revenue came in at $1.42 billion. Oh, here it is, guys. They did 46 cents EPS. Excuse me. That was my bad. Versus the 47-cent estimate. All right, so they missed on EPS and they beat on revenue, $1.42 billion versus $1.4 billion estimated. And they see full year 24 revenue of $1.3 billion plus or minus 5% versus the $1.38 billion. So a little bit under there, a little bit under the estimate. And they see adjusted EPS of 29 cents versus the wow, that's bad, 41-cent estimate. So guidance is not strong at all for Marvell, and that goes to show how important guidance is to companies, guys, whether they're a growth company, slow, you know, a more of a slower growing company. You guys know what I mean. Guidance is very, very important, and it was subpar guidance for Marvell, and the stock is taking a beating. And to be honest, guys, this could be prone to a drop, is vulnerable to a drop under that 180 SMA. It could get ugly. So that is C3 or not 3. It's not C3AI. My mind is still on C3AI. That was Marvell. The next stock on the list is none other than ChargePoint, ticker symbol CHPT, which, holy smokes, this thing is collapsing. It closed at $11.26, and right now after the bell, guys, it is under $10 a share. It actually got down all the way to the low 9s. You can see it right here. So at one point, it was down 20%, and right now, as I'm making this video, guys, mind you, it's about 5 p.m., it is down 14% after the bell. Not too good at all. So they ended up losing 23 cents in EPS, which missed the negative 17-cent estimate. And sales came in at $152 million, which missed by $13 million, guys. The estimate was $165 million. So they missed EPS, missed on revenue. They see Q1 2024 revenue of $122 to $132 million versus the $152 million. So, man, guidance is not looking good at all here for ChargePoint on revenue especially. And for a company that's growing, this is actually, you know, growth stock, growth company. That's not good. The fact that revenue guidance is that poor, I mean, we're looking at 122 to 132 million for Q1 versus 152. The lower end of that range, guys, is $30 million less than the estimate. That's huge. We're not talking 2 to 3 to 4 million. We're talking $30 million. So ChargePoint, it's getting hit, rightfully so. It makes sense to me completely. And it looks like we're in a falling knife territory. It looks like that head and shoulders here is playing out. The right shoulder is playing out. So where could it go? I mean, this really could go to $8, $8.50. Low mid eights, that's where I can see this thing going based on the 4-hour chart. So not looking good at all there for ChargePoint. And we also had Broadcom. Let's see what Broadcom did. They ended up reporting, this is ticker symbol AVGO. They ended up doing, and mind you, the chart looks pretty good on Broadcom, clearly holding an uptrend. It looks like now we're up a little bit. Yeah, barely, but we are up over $600 a share here after the bell. Looks like the trend is holding. We're breaking out of the 50 SMA as well, which is great. So AVGO ended up doing adjusted EPS of $10.33, which beat the 10.11 estimated, so that's good. And they also beat on sales, $8.91 billion versus $8.90 billion estimated. Not too bad there. So they beat EPS and they beat on revenue. And it looks like here they guided for Q2 revenue of $8.7 billion versus the $8.6 billion estimated. Not too bad, guys. Not too bad. So this one is unchanged, unlike some of the other stocks. A lot of the other stocks we've talked about today are all over the place. So nice change of pace here with AVGO, Broadcom being a bit flat, just chilling out after the earnings. You can't complain. And before we continue on, guys, if you haven't gotten your free stocks yet for Moomoo, you can get up to 17 free stocks. Link down below, or you can just simply go to stocksurfest.com/Moomoo. Once you open up an account, you get one free stock, and if you deposit at least $100 on top of that one free stock, you get 4 more free stocks and 2 free shares of either BBAI or ticker symbol AI. And listen to this, if you deposit at least $1,000 onto the platform, you get all those free stocks I just mentioned, plus up to 10 more free stocks. So if you want all those free stocks, guys, up to 17 free stocks, check out that Moomoo link down below, or just simply go to stocksurfest.com/Moomoo. And of course, all those links down below, guys, not only the Moomoo link, but the Patreon, the Webull, all of those help out the channel. I appreciate you guys as always. And now let's continue on with the last stock for the video, or at least the last stock that reported earnings, JWN. Let me pull it up and show you guys. JWN reported earnings, and we actually talked about Macy's earlier, which Macy's, they crushed earnings and their stock ended up exploding. JWN, on the flip side, is not really doing much. Actually, it is up a little bit, but not nearly as much up as Macy's. And now that I'm looking at this, holy crap, look at this massive move that JWN had about a month ago. That's pretty impressive. So they just reported numbers. Let's see here. They did 74 cents adjusted EPS versus the 66-cent estimate on sales of $4.2 billion versus $4.34 billion estimated. So they beat EPS. They missed on sales. So that, not the best, but they do see full year 23 adjusted EPS of $1.80 to $2.20 versus the $1.62. That's pretty good. That's well above the estimate there. And let's see here. Anything on revenue guidance? They see full year 23 revenue decline, including retail sales and credit card revenue of 4 to 6% versus fiscal 2022. All right, not the best sign, but the stock again is moving up a little bit, like I said, and it does seem pretty oversold right now, as it is beaten down from $30 to about $19-20. So it is down about what, 9% or not 9%, $9, 35%. So let's see what Nordstrom JWN does at this main moving average on the 4-hour chart. You guys can see we're right by the 180 SMA as I'm making this video. Do we end up getting buyers to come in here? Do we plow right through, let's say, the 50 moving average, which is right around 20 to 21, or do we end up failing at this point and breaking trend completely? I'm going to set my alert at $21 here on JWN, and we'll see where it goes from that point. So let's just do a quick look at Tesla before we wrap up the video, guys. TSLA, it's still pretty much down 6% like it was earlier in my last video, or my Tesla video for the day, where we talked about more, the investor day, the stock. So if you all didn't catch that video, go check it out. We covered it pretty, more in depth in that video. So Tesla is still looking the same pretty much technically like it was in the last video. We have the head and shoulders, but again, we talk more about the investor day in that last video. So you're going to go, you're going to want to go watch that. And I guess that's it for this video, video, guys, that's pretty much it. We covered all the earnings that I wanted to. We broke down all the stocks that I wanted to. So if you enjoyed the video and you like the stock market content on this channel, hit the like button. Make sure to subscribe. Check out my Patreon and the Weibo link down below. And don't forget to get your free stocks from Moomoo, up to 17 stocks, depending on how much money you deposit. All those are down below. And with that being said, I'll catch you guys in the next one. Peace out.